Oh man, so the Bitcoin bulls and bears continue their critical battle at this key level. But could history be repeating itself in the bullish case? There's been a lot of talk, and rightfully so, of all the risks here at this critical price level. In this video, I'm going to break through some of the key levels which could suggest history is repeating itself for the better. You can see Bitcoin here posting a slightly green day today, up 0.5%. This follows yesterday, which was also green, but that's a weekend, right? We needed to wait validation today. We're seeing traditional markets up. We've seen bond yields take a little knock to the downside. Is risk ready to rotate back on? We're going to cover that off, guys, because one thing is for sure. If you look at this Bitcoin chart here on the daily chart, staring out at you right now, you should see that we are trying to form a very important higher low. Here's your low. Here's your next low. That would be your higher low. And as long as you can accompany that with a powerful move to the upside to give you your higher high, not only could that be a good trade for you guys to take, but also it can signal we can continue our upward trend and get through that critical level where we got rejected at 25. This is what the bullish case is looking for right now. Now, what does that mean more in terms of a macroeconomy? Well, in terms of the macroeconomy, why are markets so positive today? Well, markets are up 1%. We're seeing the S&P 0.65% up, NASDAQ 1% and 0.3 here on the Dow Jones. If you take a look at the Fed rate monitor tool, the market's not changed, right? It's still 30% of the market, slightly lower, 28% here, is pricing in 50 basis points. Now, I've made my view clear. I don't expect, unless we get horrible CPI on the 14th of March, okay, not long from now, by 8 or so days from now, unless we get horrific CPI, not just a little miss, we get bad CPI, really hot CPI, maybe the Fed will do 50 basis points, but they know that's going to destroy their credibility. So my view is, I think and hope that for the bullish case to play out, we need to see that February inflation comes back in line. We've got an important non-farm payrolls figure this Friday, okay? This Friday, non-farm payrolls is expected to come in at 225,000 new jobs versus the 517,000 odd we saw at the last reading, right? That was a huge miss. Too many jobs created, not good. So it needs to come back in line at 225. We'll be looking at wage growth. Are wages going up? If wages are going up, that's going to give us a sign about inflation. And markets are worried about sticky, entrenched inflation because we had the high January reading. Now, if that reading comes back in line, if we see that January was just a blip, the light will turn green, the traffic lights will be back on, and Bitcoin is primed, don't get this twisted, Bitcoin is primed, ready for that next move. It's not like we're in the middle of nowhere. No, we're at a critical level. Either the bears are going to push it to the downside, we see inflation is entrenched, and then we need to look at the bear case, or we're going to see that inflation is under control, and we're ready to continue with our move. And what that will suggest here on the weekly chart is a major fight. We've been monitoring this here on the weekly. Remember, and if we bring this out here, bring out our EMA ribbon, you know that we're getting rejected here violently from the top of our EMA ribbon by the bears. If we can get positive news showing the February inflation is coming to the right side and the jobs report, if we can get good macroeconomic data, that could give us the green light to go mount our next attack at 25 with a higher low in play and start moving our way to reclaim that EMA ribbon. Bad inflation data showing that inflation is entrenched, showing that it's sticky if we miss our figures, if we get bad jobs figures, and the bears will be rejoicing, guys. Expect the bears to push us back down into our channel, which is between 18,700 and 22. Okay, middle ground here is at 20, important support at 20. That is then what we're looking at. Now, here's the good news. The good news is on a weekly time frame. What's our path out? So if we did indeed have our bearish situation here and the situation happened that the inflation was entrenched, well, then we're going to start coming back here. But again, as long as we can rotate, whether that's at 20, whether we even need to come to 18,700, I don't mind. I'm going to take that as an opportunity to buy the dip. I don't think we're going to hit some of these lows at 15,500. I cannot see it. The macroeconomy is not in as bad a situation as it was. The situation we faced last year was a very unique set of circumstances. Now, there's one caveat I will add to that, and that is crypto-specific issues. I made clear in my previous video that if crypto prices start falling, particularly Bitcoin, if we start getting below 20,000, which we're still a little bit off right now, but if we do start falling below some of those levels, expect other firms to show some troubles, okay? Expect there to be other firms, projects that are mismanaged, exchanges maybe, some hedge funds, other players out there, lending platforms that could be in a bit of a pickle through liquidity. Okay, so I expect that to happen if Bitcoin prices fall low and stay there, like when we're doing so in these periods. So we need to see that Bitcoin holds strength, ideally not fall below 20, because I think in the 19s and the 18s, and definitely if you lose lower than 18, there will be projects that are struggling, that are breathing just about with their heads above water right now, that Bitcoin's above 20, but if it falls below, they could start getting themselves into some cash flow problems as well. So that's something to watch out here on the daily. Now, what are we looking at? Where is history repeating itself? Well, I want to share this fractal pattern with you, which was being shared on Twitter. It's a very interesting fractal pattern. If you look at 2020 and look at the pattern we're forming right now, we're bouncing from important support at the bottom of this rising wedge. And what you want to look at is what's happened in 2019. Now, of course, you need to take this with a pinch of salt. Of course, you need to understand that fractal patterns are only right until they're not. But the reality is you can see that this is the kind of pattern that can just go on a run. And it's for this reason that I want to be in the market. You've seen here, look at this, how it can just run. It can test the bottom and off it goes. And once it goes, you're going to struggle to get back into this market. And that's what I've been saying for a while now. If this wants to run to 30, it will go and it will not wait for anybody. We bring out here, if I show you here, remove this EMA ribbon, what do you see? There is a huge gap here on Bitcoin from when we fell at these levels up here. And again, sorry for the messy chart, guys. When we fell from this levels at 40,000, we fell very quickly. So I expect these levels to fill quite quickly to the upside as well. So that's my bullish case. That's what I'm expecting in the market. Let me know, what are you guys expecting? We've got to manage both sides. You've got to understand the risk side and you've got to understand the bull case. And right now we're right in the middle. Markets want to bounce. You saw the 10-year yield come down slightly. You've seen the dollar index fall slightly here. You're seeing risk on stocks go up, and you're seeing Bitcoin try to bounce. Another thing I want to share with you before I leave you guys is do not underestimate the power of these doji candles. We doji candled here and reversed. We doji candled here 2 days ago, and I shared that with you. The only caveat I had was that this happened on a Saturday, but so far we are seeing 2 green candles. Can Bitcoin show some strength and work its way towards 25? That's going to be the key. It's going to depend on macroeconomic data. Do not forget, Jerome Powell testifies tomorrow and Wednesday on inflation and monetary policy. This will move the markets. That is then followed by initial jobless claims on Wednesday, and on Friday, the important non-farm payrolls. Next week, we get the CPI data on the 14th. Then on the 22nd, we get the FOMC meeting. Really busy March here, and it will set the tone for Bitcoin for the rest of the first half of this year. Hope you guys enjoyed. Don't forget to smash the likes. Don't forget to subscribe, and I'll see you in the next one.